Welcome to today's video. If you're a forex trader but you're still finding it very difficult to make a consistent profit from this industry, then this video is for you. At the beginning of any trader's journey, they always jump from one strategy to the other, from one technical analysis to the other, from one system to the other, or one concept to the other, hoping to find a holy grail that can help them make a consistent profit from these markets. Anytime they encounter losses, they will always think that there is something wrong with their system, there is something wrong with their analysis or their trading strategy, and because of that, they will now start to look for a new one. Then this cycle keep on going, and at the end, they will always be walking around with no progress. Now, in this video, I'm going to tell you the 3 things you must fix in order to become profitable in this industry. It doesn't matter how long you've been in the industry, you can be a beginner in this industry. As far as you learn these skills in the aspect of these 3 dimensions, you are going to be profitable. If you really want to be successful in this industry, then you will start training yourself to look at this market in 3 dimensions. You must understand these 3 concepts in order for you to become successful in this industry. Number 1 is a good trading strategy. A good trading strategy is a strategy that has a trading edge, a positive expectancy, in the sense that over a series of trades, you come out positively. A good trading strategy is not a strategy that doesn't lose trades. It's not a strategy that doesn't encounter even streaks of losses. It's just a strategy that has stood the test of time, and that over a series of trades, you see that the strategy is going to give you a positive outcome. For you to develop a good trading strategy, you must put these 3 things in place: your entry criteria, your management criteria, and your exit criteria. What are the things you will see in the market that will necessitate you to buy or sell? Then when you are in active position, what are the things you will see in the market that will necessitate you to manage your trades, either to take partial profits or move your stop losses? Now, this is a management criteria. You must incorporate it in your trading plan or your strategy. Now, the third aspect you need to understand is your exit criteria. How are you going to be leaving the market? Because it's not just enough for you to enter the trade or manage your trade. There are times that you need to exit the trade. If a market is an uptrend, it will not continue going up forever. There will be a time it's going to reverse. So there will always be a time you need to enter a trade, manage your trades, and exit your trades. So your trading strategy should be able to dictate what you'll be seeing in the chart that will necessitate you to pull the trigger and exit the trade. There are ways you can exit a trade. It's either by leaving the trade to hit your stop loss, hit your take profit, or you manually exit or close the trade. Whichever one you want to adopt, it is going to be incorporated in your trading strategy. So it's not something you begin to say, oh no, I feel like the market is going to do this, let me get out of the market. No, while building your trading strategy, you must make sure that you incorporate these 3 things. Now, when you have fixed your entry criteria, your management criteria, and your exit criteria, the next thing you need to do about your trading strategy is to subject it into backtesting and forward testing. You need to test how this your strategy performed in the previous market and how it's going to perform in the upcoming market before you start using it for your real hard-earned money. When you are finished testing this your strategy and it proves that over a series of trades, it is going to end up positive, this is when you say, yes, I have a good trading strategy. Then when you now fix this thing, you will now go to the second dimension, which is what we call the risk management. I've heard a lot of people saying that, yes, they have a good risk management guide, that they make use of stop loss. I am here to tell you in this video that the use of stop loss is not the same as having a good risk management plan. Don't get me wrong, it is part of it, but it's not everything about it. Now, a good risk management plan can contain a lot of other factors. Number 1, and the most important, is the ability to understand how to calculate your risk. In the sense that every trade you want to initiate, you must know the actual amount you want to be risking in that particular trade. When you now settle it, you look at other factors like how many trades am I willing to open at a time, and how do I scale in. All these things are things you need to incorporate in your risk management. The final aspect of what you must face in order to become profitable is the proper trading psychology. I cannot overemphasize this. You can have a very wonderful trading strategy, you can have a very wonderful risk management guide, but without the proper thinking pattern as regards to trading success, you are going to see yourself stuck and repeating the same mistakes over and over and over. Remember from the beginning, a good trading strategy is not a strategy that doesn't encounter a loss. A good trading strategy is a strategy that will be able to deliver in over a series of trades. It will have a positive outcome. Now, you need to understand how you're going to think and correlate your risk management to that of trading strategy in order to make a sustainable profit. There are 3 things you must understand about trading as regards to trading psychology. If you understand these 3 things and modify it in the way that is going to suit you, you begin to see yourself profitable instantly. Number 1 is your relationship and your understanding of fear. Number 2, your relationship and your understanding of pain. Number 3, your relationship and the understanding of hope. A lot of traders always tend to be hopeful when they should be fearful, while others tend to be fearful when they should be hopeful. You must understand this, that everything about trading is all about pain. When a trade is active and is in loss, it will be causing you pain. At the same time, when your trade is in profit, it will still be causing you pain. Don't get me wrong, I will explain. When you have an open position and you have an open profit running, instead of you thinking that market will keep on going in your favor as dictated by your trading strategy, instead of you to continue being hopeful that the market is obeying your trading strategy, you begin to envision a way that market is going against you and is taking your open profit back. Immediately you start thinking this way, you'll be forcing yourself to be exiting and closing trades immaturely when you're not supposed to close it. And at the end, you're not doing what your trading strategy is saying. The same thing is applicable when a trade is going against you. Now, you are a trader that says, I want to risk $50 per trade. You now see yourself initiate a trade, and because the trade wanted to just retrace before it continue going in your favor, in that retracement, you already seen a loss of $10 or $20. Instead of you focusing on your trading strategy, that is either it hits my stop loss or it start going in my favor according to your strategy, you begin to feel fearful, and that fear is going to attract pain. And once it arises, instead of you thinking that your trading strategy should be the ultimate goal, you'll be focusing on the loss, thereby forcing yourself to exit that trade in a small loss even before the market hits your stop loss. And oftentimes you see the market reverse in your favor after you exited it. So you now see that without your ability of organizing your concept and understanding of fear and hope as regards to trading, you are going to mess up your trading strategy and your risk management guide. Another way that your trading psychology is going to help you is when you want to initiate a trade, you happen to see this your favorite setup and you be like, yes, this is going to play out. In fact, let me double risk. Let me buy 10 times or 5 times the amount I usually buy before. When you start seeing yourself thinking and reasoning in this aspect, just know that you are no longer in charge. Your emotion has taken control, because you would have understood that your trading strategy says that anything can happen. You can encounter a loss, you can encounter a win, but the most important thing is that I will deliver you over a series of trades. So you don't actually know that whether that trade is going to be profitable or not. But because you've already built yourself in the concept of I want to make that money, I've seen a perfect setup, you can even go and over risk and risk everything you have in your account. And at the end, if that trade happens to go against you, you see yourself losing big time. So you must fix this trading aspect of it by understanding that anytime you initiate a trade and that market is going in your favor I mean is as you dictated in your trading strategy, a strategy that have been tested and trusted. Whenever you initiate such a trade, you should be considering that the market is going according to your trading strategy. You should be using your management guide to initiate and manage those trades, not based on what you are thinking that the market is going to do. At that point in time that you have an open profit that is going in your favor, you should be hopeful that the market will keep on going according to your strategy instead of being fearful. Reverse it. Instead of being fearful, you should be hopeful. Whenever a trade is in your favor, Focus on following your risk and your trading strategy. The same thing is applicable when the market is going against you and it has not hit your stop loss that you have set and predetermined when you are building your risk management guide and your trading strategy. Just at that point in time, still be hopeful. You can only be fearful when you find out that market has passed where you are supposed to put stop loss and you're already in a deep loss or in a loss greater than what you would have risked or what you would have initiated in that particular trade, because you are thinking the market is going to come your way, you're supposed to be fearful at that point in time. Why? Market has shown you that it is not time to go your way today. I am going my way. So the best thing you would have done is to follow your trading strategy and exit. You should be afraid then. You should be fearful and you should exit that trade because it's no longer going your direction, because it has violated your risk management guide. So just try and build yourself and develop yourself in a way that you can be hopeful where you are supposed to be hopeful and you can be fearful where you are supposed to be fearful. Now from this video, you understand what I mean when I told you that technical analysis alone is not going to make you profitable, that you need to build in place these 3 dimensions by building a good trading strategy, having a good risk management guide, and having the proper trading psychology. When you fix these 3, you will see your trading journey go up. Before you know it, all the things that have been the challenge you have in the trading industry is now a story. Now, you are a trader. You have already built a trading strategy. You have built a very good risk management guide and you've trained your psychology to be able to become profitable. But you still see yourself struggling in making profits. Then I want to tell you, it might be that there are this small thing you need to fix. Until you fix that thing, it will be difficult for you to appreciate these 3 dimensions. Now, somebody like me, it has been long I understood most things about the technical analysis. I built strategies upon strategies. I developed a good risk management guide and I tried my possible best to think about the trading psychology. But I kept on being stuck until I discovered that concept, and this is what we term the profit gap. If you understand that concept of profit gap and feel it, you'll be seeing yourself skyrocket in their trading journey. You will see yourself shoot up. So this concept of profit gap is very important. So in our next video, we are going to do a full video on what we mean by profit gap. So if you are somebody that have undergone those 3 dimensions of trade, do well to stick around so that when we drop that next video, you are going to see how you can put it together and become successful once. If this is your first time on our channel, like this video, subscribe and click on the notification bell so that you always be updated whenever we drop a new information. Also, recommend and share these videos to your friend. Remember, we can all make it together. We can all be financially free. Point FX is out to help traders succeed.